Assalamualaikum warahmatullahi wabarakatuh. Hi, my name is Firdaus Salim Abdul Rahman. My metric number 2023300789.
Investment appraisal. What is investment appraisal? Investment appraisal is the process of evaluating the attractiveness, viability, and potential profitability of an investment project before committing resources to it. It helps businesses and individuals decide whether or not to invest in a particular project or asset. The purpose of investment appraisal is to assess the potential return on an investment, to compare different investment options that have, and also to minimize risk and make informed decisions. There is two common type methods of investment appraisal, which is payback period. Payback period, it means that how long it takes to recover the initial investment. Shorter payback equals to lower risk, but it's also at the same time it is ignore the profitability after the payback. The second one is net present value or NPV, which is it is calculated based on the total value of future cash flow discounted to the present value deducted with the initial investment. Next, I will explain the calculations of initial outlay. To get the initial outlay, first we need to find the depreciable cost. What is in depreciable cost? First, we need to add the cost of new machinery, which is 280,000. Next is installation cost, which is 7,500, modification cost 12,000, and also transportation and taxations, which is 6,500. After we plus all those costs that have been incurred, and we get the depreciable cost amount, which is amounting to 306,000. Next, we need to add the increase in investment, which is the net working capital, amounting to 25,500. After that, we need to deduct with sales proceeds of old asset, which is amounting to 65,000. Next, tax loss, we need to add tax loss on disposal. About the calculations of tax. For the tax loss on disposal, it was reflects based on the gain or loss on disposal. First, we need to find the carrying value of the old machinery at the end of the disposed date. We take the cost of old asset, which is 67,200. We minus with 90,200. It is the amount of accumulated depreciations, and then we receive the carrying value of the old machinery at the end of the disposed date, which is 48,000. To know whether it is a gain or loss, we get the selling price, which is 65,000, deduct it with the carrying value that we received here, which is 48,000, and then we got the gain on disposal amounting to 70,000. For the tax treatment, 25% times with 70,000, which is the tax loss on disposal since we receive gain on disposal. In this case, we need to add the 4,250 into the initial outlay. And then after we total up all those costs, we receive the initial outlay, which is amounting to 200.
Assalamualaikum, my name is Raju Zami Bajir Ruslan. My metric number is 2022874888. Next is net present value. To calculate the present value, we have to use present value table. For the year 1 to 3 years, we have to use the present value annuity table, which we got 2.1065 multiplied with 104,100, and we will get 219,286.65. For the year 4, we use the present value single sum with 20%, and we got 0.4823 multiplied with 111,600, and we got 53,824.68. And for year 5, we still use the single sum present value, which we got 0.4019 multiply with 162 100, and we got 65,147.99, and the total of the present value is T38259.32, and we minus the initial outlay, which is 270,750, and we got the net present value, which is 67.50932.
My name is Nurunka Shadamia binti Muhammad. My matric number 2023-300625. The definition of SME. SME stands for Small and Medium Enterprise, are business typically operated with a limited number of employees and restricted to the financial resources. According to the article, the size of a classification can be different depending on national definition, but generally include business between 10 and 100 employees. SME are often privately owned and serve as a key contribution to economic growth, employment, and innovation in both developing and developed economies. Despite their small size, they form a majority business population worldwide and essential and in creating flexible, adaptive business model. However, their scale also make them exposed to the financial challenge and resources concentrate, especially uncertain economic conditions.
My name is Nur Arisha binti Fauzi. My matrix number 2023-164351. Next, we move to the SME issue. This article emphasizes the critical importance of effective financial management for the success and sustainability of small and medium enterprise SMEs. Recognizing that SMEs are vital contributors to economic growth, innovation, and employment worldwide, the paper highlights the unique financial challenges these businesses face, such as limited access to traditional funding sources, inadequate financial literacy, cash flow management issues, and operational inefficiencies. The key point that we discuss is challenge faced by SMEs. SMEs often struggle with obtaining external financing due to lack of collateral, poor credit history, or limited financial infrastructure. They are also hampered by internet issues like limited financial literacy and poor cash flow management, which can threaten business continuity and growth. Next, importance of financial planning and budgeting. The article stresses the necessity for SMEs to develop precise budgets and financial plans to manage resources effectively. Proper financial planning helps in monitoring performance, controlling costs, and setting realistic financial goals. Next is diverse funding options. Beyond traditional bank loans, SMEs are encouraged to explore alternatively financial sources such as crowdfunding, venture capital, government grants, and informal financing like borrowing from family and friends. Diversifying funding sources reduce reliance on a single channel and mitigates financial risk. Next, cash flow and cost management. Effective cash flow management remains central to SME financial health. Strategies include forecasting cash flow, managing receivables and payables, and maintaining emergency reserve. Cost control practices such as negotiating better supplier terms and reducing unnecessary expenses and also emphasized.
Fatin Atira binti Muhammad Azam. My matric number is 2023-103-947. Next, fifth key point is use of technology and financial tools. The adoption of financial software and automation tools is highlighted as a way to improve accuracy, efficiency, and transparency. These tools facilitate real-time financial analysis, enhance decision-making, and streamline operations. Six is strategic financial decision-making. SME should regularly evaluate investment opportunities and determine which project offer the best return. Strategic decisions around capital budgeting, funding options, and resources allocation are crucial for sustainable growth. 7 point is risk management. Diversification of revenue stream and adequate insurance coverage help mitigate risks associated with market fluctuation and operational uncertainties. SME should also implement risk management strategy to safeguard their business. Last point is recommendation for improving financial management. The article advocates for SMEs to strengthen financial literacy, explore innovative financial methods, implement sound financial policies, and leverage technology to overcome challenges and capitalize on the growth opportunity. The article concludes that effective financial management is indispensable for SME to thrive amid economic uncertainties and competitive pressure.
My name is Fatin Amira binti Muhammad Shukri. My metric number is 2023-103673. Investment appraisal process and advice using selected decision-making technique. The article emphasized the importance of strategic financial decision-making for SMEs, which directly supports the investment appraisal process, although it doesn't name specific appraisal tools like NPV or payback period. It discusses core ideas such as capital budgeting, forecasting, return on investment (ROI), and resource planning. The investment appraisal process involves identifying relevant costs and benefits of a proposed project, forecasting future cash flow, and applying decision-making techniques to evaluate project feasibility. Two common techniques used are the net present value (NPV) and the payback period. NPV assesses the profitability of an investment by discounting future cash inflow to their present value and comparing them with the initial investment. If the NPV is positive, the project is expected to generate profit and should be accepted. Payback period measures how long it will take for the project to recover its initial investment. A shorter payback is preferred, especially for SMEs with limited liquidity. Based on the principle discussed in the article, SMEs should choose projects with a positive NPV and a reasonable short payback period, as these options offer long-term value while maintaining financial flexibility. The article reinforced the idea that SMEs must make informed financial decisions using proper evaluation tools to maximize growth and minimize risk. Therefore, if the investment shows strong results under both techniques, the SME should proceed confident with the project.
In conclusion, I agree that financial management is very important for small and medium business to survive and grow. Many SME face a challenge such as difficulty in getting loan, poor budgeting, and lack of financial knowledge. To overcome this problem, SMEs should plan their budget properly, manage their cash flow, control costs, and handle risk wisely. It's also important for them to use financial technology and continue learning to make better decisions. By applying this strategy, SME can improve their financial position, become more stable, and contribute more to the growth of the economy.